Coming to the concept of gross profit and net profit. Now students, gross profit is the result calculated out of trading account. So let us understand what is the trading account. Trading account. Now students, trading account is an account which is prepared to show the operational results of the business or to actually check the profits and losses earned out of operational activities of the business. And by operational activities, we mean in case we are a manufacturing firm, then out of manufacture of goods, and in case we are a trading firm, then out of selling of those goods. So trading account shows the result of operational activities of the business. That is, in case of manufacturing business, then it includes profits out of activities related to manufacture, and in case of trading firm, then profits out of activities related to sale or purchase. Since in case of manufacturing business, the activity of manufacturing goods is your primary activity. So the result of this activity would be calculated through trading account. And in case you are a trading firm, that is, you deal in sale or purchase of goods, in that case, the profits and losses that you have made during the year out of this activity of sale and purchase would be calculated through trading account. So students, in trading accounts, it is only the direct expenses that are shown. So we can derive a formula for gross profit as it is a difference between gross profit is a difference between sales minus purchases plus direct expenses. Now here purchases means purchase of goods. And what about direct expenses? What are direct expenses? Students, direct expenses are those expenses which are directly related to the cost of production of a good or which are related to bringing a product to the point of sales. So we can write it as related to cost of production or to bring a product to the point of sales. So we can calculate gross profit as sales minus sum total of purchases and direct expenses. Immediately following the concept of gross profit is the concept of net profit. Now students, net profit represents the profits of the business after deducting all the expenses. That includes indirect expenses also. So we can say that net profit is equal to gross profit minus indirect expenses plus indirect incomes. in case they are given. In some cases, indirect is also written as other expenses and other incomes. And you can write it as other incomes. So now students, all the indirect expenses are transferred to the debit side of profit and loss account, and all the indirect incomes are transferred to the credit side of profit and loss account. So the difference of the incomes and expenses would be taken as net profit. So in short, we can say that in profit and loss account, all the expenses of indirect nature, indirect expenses would be put on the debit side, and all the indirect incomes would be put on the credit side. This is credit side. Then in case it is gross profit, it would be added here. From this, all the expenses would be deducted and the balancing figure would be net profit. Now, how do we identify indirect expenses? Students, indirect expenses range or differ from business to business. The simplest means to identify is that they are not directly related to manufacture of goods. So we can simply say that something which is not a direct expense is actually an indirect expense. So now coming to accounting treatment of profits. Accounting treatment of profit or loss. Now students, in case it is profit, in case of profit, remember this profit belongs to the owner and hence should be transferred to capital account. So the entry would be profit and loss account debited to capital account with the amount of profit, and in case of loss, loss would be borne by the owner. So then entry would become capital account debited to profit and loss account, that is loss.